Andy, you guys just had earnings. The shares are still sitting just below the all-time highs. Walk me through what you saw during a period where so many students are stuck at home. I'm guessing you've got a big uptick in the activity on your platform and products.
Yes, certainly. Well, first, thank you for having me on, Oliver. I appreciate that.
Thank you.
Yes, we've been a high growth company for many, many years, and if you go back just over the last 3 or 4 years, we've been, consistently growing at above 30%. And the thesis behind Chegg was always that it was going to be inevitable that more and more educational services would go online, and that is that they would be online, on demand, and affordable. And what we've seen with COVID is an acceleration of that trend. Starting in basically mid-March when kids went home, and this is not just U.S. kids; it's across the globe. We saw an acceleration in new subscribers, and for the quarter, we saw 67% overall subscriber growth. And even when you back out an acquisition we made late in the quarter, our organic growth was was sensational at 58%. So we've just continued to see the trends that we've been seeing for many years, accelerated a little bit by COVID.
Your revenue came way ahead of the expectations by the street. I'm looking through the analyst reactions, and just about everything is positive. A lot of sell-side analysts upping price targets on the stock, etc. But the fast forward that you discuss here, the push forward, how much of that then will have an effect on the other side of quarantine that means slower growth that you had? Is that going to be the case, or is this going to be something sticky for students who permanently change their habits?
Well, and that's it, right? What we think we're seeing right now is just a fundamental change in how students get help. And if you think, at some point in time, kids are going to go back to school, but there's going to be less funding, as most people are aware. And we believe those study halls, the writing study halls and the math study halls, they're just not going to get funded. So we believe what we're seeing now will continue even as students start to go back to campus.
Okay, now what does that mean for the bottom line growth? Does it mean that you're going to be expecting these 40-50% numbers? I mean, what do you do to continue to make sure there's incremental growth? I imagine that the demands you hear from investors only increase as the success builds.
Yeah, so one of the things we started looking at, or started investing in, I should say, at the beginning of last year, 2019, was expanding beyond the U.S. And so we've been making investments going outside the U.S. and we've started to see a fairly significant acceleration outside the U.S. and not just with English-speaking countries. That's where we placed our primary focus initially, and that was the English-speaking countries like Australia, Canada, and the UK. But what we saw as a result of COVID was a very large push outside of those English-speaking countries. So countries like Turkey, Saudi Arabia, South Korea. And so we believe that has significantly expanded our TAM. So where, maybe 3 or 4 years ago, we would have thought our TAM may have been 30 million, 36 million students, US-based students. That's now north of 100 million. And we've just started on the international growth path.
So when you mentioned their TAM, total addressable market, correct me if I'm wrong, I just heard you say it's 3 times bigger than you originally thought?
Yes, absolutely. So think about Chegg 5 years ago. We were U.S.-based. We were U.S.-focused, and you've got college and high school students, call that 36 million students. Now that we're going international and beyond the English-speaking countries, we believe it's north of 100 million students that's addressable for our products.
Wow. As you do go international, does that come at an initial cost to get those operations up and working? I imagine the folks who are tutoring in English are not the ones tutoring in Mandarin, are not the ones tutoring in different language. Does that mean new hires? Should investors expect smaller margins as you expand internationally?
No, the beauty of our model, right, and a lot of the content that we have, and STEM is STEM, regardless of whether or not you're in the U.S., the U.K., Turkey. STEM is STEM. Now, obviously, if you go into some of the the other subjects like history, that's a little different. But the bulk of our services are around STEM and quantitative business, and so we believe that translates across the globe. Now, to your question, whether or not we have to make certain investments, the answer is yes. We started making those investments last year, and while we've made those investments, we've continued to see our EBITDA margins expand, and we would expect them to continue to expand even while we're making these investments.
A lot of analysts put your company in the same category as software, enterprise, cloud companies due to the recurring nature. You do have debt, though. You've got about $200 million that I see according to Bloomberg, and that puts you at higher debt-to-equity ratios than some in the category of these high-growth e-commerce and cloud-style companies. So how does that factor into your plans? Walk me through what that means for how you spend and how quickly you pay that back down. Is that a priority?
Well, right now, so let me to clarify. When you say debt, yes, we do have. We've in the past couple of years we did a couple of convertible debt offerings, and as you know, that's a combination debt and equity,
Yep.
Or it can be equity or it can be debt. So I wouldn't look at this as this isn't like just debt. It's equity linked. So that certainly doesn't concern us. What it did allow us to do, however, was to really bolster our balance sheet. And we have $1 billion of cash on the balance sheet. We believe we're by far the best funded in the education space, and we believe that gives us opportunities to both expand organically and through acquisitions, which we have done most recently. In fact, just 2 months ago, we added a company called Mathway, and our balance sheet has allowed us to expand both ways.